What's going on, guys? Ben here from Black Swan FX. Do apologise about the cap today. I'm having a bad hair day, so it was easier to cover it than try and sort it out because I wanted to get this video recorded for you guys today. So this video, guys, is for anybody that is struggling to make consistent profits in the Forex market, or anybody that is new to trading, to help you avoid the common pitfalls that most people fall into that prevent them from becoming a profitable trader in the Forex markets, guys. So two things that you're going to need: a mental game and a tactical game. And these are interrelated, as you'll see shortly. The closer you get the balance, the higher that your success will be in trading. So before we start talking about trading, especially if you're new or struggling with consistency, you need to understand probabilities. Getting your mental game in check first will save you years of stress, money, and heartache, and is the only thing that will prevent you from becoming a consistently profitable trader. The tactical game, guys, is the easy part. Trading is literally 85-90% mental and 10-15% tactical. And you've got to become comfortable with losing. It's how you react to the loss that's more important than the loss itself. This separates the professionals, guys, from everybody else, and you'll understand exactly why in a moment. So why 99% of people fail in trading? Most people bounce around with the shiny object syndrome and don't stick to one method or strategy long enough to give themselves times to get good at it. Most are looking for the big win or the get rich quick strategy, especially newbies. Or they think the more I learn, the better I'll get. And that's a wormhole you don't want to dive down. I'll cover that later as well. Look at any elite performer in the world. How did they get there? Years of hard work, dedication, discipline, consistency, repetition, and most of all, a positive winning attitude. You got to focus on the process, guys, not the money. There's a lot of noise online, and you see a lot of gurus, guys, flaunting their wallets, their Lambos, but that's because they've mastered the art of the tactical and mental game and spent years of heartache and dedication and pain mastering their craft to get there. The same as any elite performer. They didn't just flick a switch and one day, all of a sudden, boom, they became overnight millionaires. If this is how you're thinking about trading, you need to change your expectations now, as that mentality will only lead to failure, as it will influence how you do everything. Basically put you in the bracket of everyone on the previous slide, looking for that big win or that get rich quick strategy, or thinking the more I learn, the better I'll get, or shiny object syndrome. And don't get me wrong, you may get lucky once or twice, maybe even 10 times. But if you're not following a proven strategy, system or edge, then you're essentially gambling. And in this case, you'll always lose in the end. And there's three types of traders, guys, and most start at the bottom and only 1% make it to the top. And I stayed a consistent loser for a very long time, and it was this stuff that actually enabled me to get into the boom and bust stage and then eventually get into the consistent winner stage when I got my mental game in check. For the first 6 months, guys, I was going round and round in circles. I just could not figure out what I was doing. I thought the more I learn, maybe I'm missing a strategy, maybe I'm missing something, tactical. And I seemed to be doing everything right, but the profit sheet was telling a different story. I was minus 10k, minus 20k, minus 15k, minus 5k. I couldn't even win a bloody trade. I had no idea where I was going wrong or what I was doing wrong. And then I found out how important the mental game was, and I'm going to cover this later on. And then I became more of a boom and buster. I started winning. I was actually able to win trades. And then I got confident, but then I got overconfident, which meant I ended up giving all my winnings back to the market over and over and over again. I ended up repeating that process over and over and over again. And again, it's just about crafting the discipline and the mental game even more. And we cover this later on. And not many people can get past this stage and become a professional trader where you are actually a consistent winner with a steadily rising equity curve. And I want to help you get here first, guys, because even people with a small amount of trading knowledge can become successful just by their mentality and their attitude. So consistent winners, guys, professional traders who follow their trading plan, are constantly adapting to what the market is telling them. documenting every trade, have their mental game in check, never over leveraging their accounts or gambling, and controlling their emotions. They've broken through the threshold of consistency, as Mark Douglas calls it, in trading in the zone. And I highly recommend this book, guys, because I'm barely scratching the surface with this stuff in this small presentation, and Mark Douglas goes deep on all of this. So I highly recommend that you read this book, one of the best books that I ever read. So boom and busters, guys. Mostly people who understand the markets. These guys know now how to trade. They've got past the consistent loser stage, or maybe they've never been in the consistent loser stage because they got given, a strategy from somebody else. But these guys are risk takers, and they lack mental discipline, and they lack consistency because of that. Some people just crave this kind of trading because of the thrill. Some people love to take big gambles and have big risks and win big, but then they also lose big. But a lot of people don't have the emotional tolerance, to go through this. And if you're looking to make consistent money in the Forex market, it's not really the way you want to be going about it. Most boomers love to over leverage, especially when they're in a euphoric state. Feeling awesome after a few wins. This is where professional traders walk away for the day. We've had the wins, we've had a good day, we're done. Let's go back tomorrow, let the emotions settle, because euphoria can be more dangerous than fear, and we'll cover that later on. So the boom and busters with the euphoria, they will feel, invincible, and they're like, oh my god, yeah, I feel so good, I'm going to trade more and more, I'm going to over leverage my account, and then, they've made 20k in one day or whatever, and then they'll just end up losing 20k on the last trade of the day, and the laptop goes out the window, and the drill, and their emotions and round, and their equity curve looks like this, a zigzag, and as I said, they love taking big risks, but they always tend to live in a break-even state. No, not always. A lot of them do. A lot of them tend to live in a break-even state without really ever withdrawing any real profits from their accounts. And consistent losers, guys, I covered this briefly earlier, me for the first 6 months of trading, and there's nothing wrong with being in this stage. This is literally where 99% of people start, unless, somebody's got a professional trader as a mentor, or a father, or a mother, and they've been brought into a trading family. People are new to the markets, or even people who, understand how to trade, but maybe their emotions have got in the way of the trading. Sometimes this can be from a string of losses. It can send you confidence off the edge of a cliff, or it can be from one big loss, which can be life-changing and devastating, and this can create a lot of fear inside you and literally destroy your confidence. And fear is the biggest killer of trading success. It can blind you as you execute any trade. You might have the perfect markup. You might, when you're marking up your charts, you're calm. You're not thinking about anything else. Your markup, the setup arrives in the market, and boom, you enter the trade. And all of a sudden, now you're second guessing. Now you're thinking about all of the losses before, the big loss, how it made you feel. You end up taking losses on a trade that would have been a winner because the market goes into a little bit of drawdown and creates panic. So you quickly get out of that trade, and then only to find that 2 minutes later it went into a tiny bit of drawdown. Then boom, it dropped into a 1 to 10 or 1 to 20 trade, and then you're smacking your keyboard, etc. And it's all to do with controlling the emotion. And I go through how to manage all of this and overcome all of this in the further slides. These traders, guys, they don't have a game plan, have zero consistency, or understand how important risk to reward ratio is. They don't trust themselves or the markets because they've got nothing to base the trust on. And they also tend to blame the markets or other people for their losses. These traders, including the boom and busters, also tend to stack positions onto losing trades instead of cutting losses because they don't want to be wrong. They're trying to win their money back, which results in more stress, drawdown, blown accounts, etc. And it's normally at that point, and I put this in here specifically because this has happened to me so many times in the past, especially when I was in the consistent losing stage. There was one story in particular, I was like 25k drawdown, and GBP was just going down and down and down, and I was stacking positions against it. I was looking for support and resistance. I was thinking, shit, it's gonna reverse, it's gonna bounce back in my favor eventually. And it got to 25k. And at one point, it was only once my setup was invalidated, it was only like 500 drawdown or something. I could have just took the loss, reversed the position, and obviously capitalize on that huge move. But when you're trading under emotional stress and fear, it shuts your ability down to think properly. The flight or fight response. So you end up tunnel visioned onto that losing trade and look for every reason as to why it's still going to be a winner. instead of whereas you were looking at the same chart without the fear and emotion, if you weren't in that trade, you'd see that it's an obvious loser and you would definitely not be, in the position that you're in. And that is how strong of an impact the mental game and emotions play when it comes into trading. So what happened is, I was stacking positions, but it got to the point where my emotional tolerance couldn't take any more drawdown. That at that time, that drawdown was more than my car, that I had, part of the side. I was like, shit, I can't afford to lose this in one day. And it was ridiculous looking back on it. The lot size of what I was doing. But sometimes, you've got to go through this to learn, but I want to make you aware of it so you can at least prevent it. But in the end, I took the loss. I think it was like 25k, something like that. And literally, if I'd have left it for another 2 or 3k, the market did have a big bounce and went straight into profit. It would have been like a 25, 30, 40, 50k trade, whatever. I have no idea. But I couldn't believe it. But that makes it even worse, So, yeah, that day was not a good day for me. But I've had, multiple like that. Where trades have gone against me and I haven't been able to take the loss because I've been, oh no, it's going to reverse. No, just take the loss. That's one thing you've got to learn to do. Take the loss. It's easier to take the loss and still have money left than using up all your margin with some big drawdown, hoping it comes back to break even, or get a little bit of profit when you can cancel it off, reverse the position, or cancel it off, wait for you to set up again, and then get back in. So this is one big thing that you've got to think about, and one big thing I'm going to cover, as we continue to go through these slides. And you've got to remember, when trading, whatever you fear, you'll end up creating that exact outcome for yourself. This is why we use a trading plan to eliminate fear and basically trade like a robot, essentially. We're trading in probabilities, So by doing this, we actually create the outcome that we do want with a carefree state of mind instead of the opposite. One thing you need to remember is taking a loss doesn't mean that you're wrong. It doesn't mean to say you have to beat yourself up or let it knock your confidence. It just means to say that your edge didn't work that time, if you have one, or you might have made a mistake. So use that as an opportunity to go back and have a look and document and learn of where you did potentially go wrong. Was it you? Was it an error you made? Or was it your edge just didn't play out that time? If you have one, and this is why it's so important to have an edge, backtest it and understand it so you know what you're looking for. And once you have a predictable outcome, guys, you can turn the markets into your own ATM. Then a loss becomes part of the probability process and doesn't feel personal because, say, for example, if you have an edge that wins 7 out of 10 times, you know that losing is part of the process, but you're always coming out on top. So if you knew for a fact out of every 10 trades you placed, you were going to win 7 profitably with a good risk to reward, you'd have no care in the world about putting trades on and losing, would you? With a probabilistic outcome, guys, you need to lose to win. And when you're following your edge, losses don't bother you, as you know overall, you're always making money. And these are a couple of reasons, guys, why you need to have both of these in check. And this is why I created this video, because it's one of the biggest pitfalls and one of the biggest reasons why most people give up on their trading dreams and careers. Everyone starts trading for a reason. Because they want to make more money, they want to provide for the family, they want to retire, there's always underlying reasons why people start trading, but remember, without mental and tactical game, you will end up a consistent loser, and you will end up with big losses, and big losses, guys, can be devastating on traders' lives. A lot of people don't actually even come back for them. They're very, very difficult. After that 25k one, it was very difficult for me to come back and, even trade the smallest lot. Even on I think I threw $1,000 into an account and I was just using that, and I was struggling. Every time I was putting a trade in, it was giving me anxiety, etc., etc. But again, I'm going to show you how to overcome this, and, they can ruin your confidence and literally mess with your emotions. And for some, it makes them walk away forever, but with a mental game and a tactical game that work together in synergy, you can eliminate all of this. And you can prevent this from happening if you're brand new. And this is why I want to make you aware of this at this stage, whether you're new or just struggling. I can really help you over this hurdle or help prevent it altogether. Taking responsibility. So everything that happens in your trading career is your fault. I can't express this enough, guys. You've really got to own your losses. If you don't take responsibility or you blame somebody else or the markets, then you continue to make the same mistakes. Fall into the same trap and just go round and round and round in circles. You can't grow until you accept responsibility. Hence why most consistent losers and boomers stay in the same position. But think about this a moment. Now, isn't blaming the markets a little ridiculous if you think about it? I mean, the market's doing nothing but generating neutral information. It's not generating positive or negative information. It's just generating an endless flow of opportunities for you to potentially capitalize on and make money. And just because you decide to enter a trade and it doesn't go the way you want it to go, it's not the market's fault. It doesn't all of a sudden become negative, or positive. You place the trade, and if it doesn't go in your direction, you can't blame the market for that loss. You need to take responsibility for that. You need to document that. You need to take it as a learning curve, call it market tax, go back, class it as education, go over the trade, look where you went wrong. Was it a technical error, or was it just a genuine error that played out with the edge? And you can mark it down as, yes, that was an A+ entry, but it just didn't work out this time. So how do you feel, guys, when you're looking at the charts and you're not in a trade, or you're just messing around on a demo account? You're in a neutral, carefree state of mind. And this is exactly the state of mind you should be in when trading on your live account. And this is where a trading plan and thinking in probabilities comes into play. When you're thinking in probabilities and you have an edge in the market that statistically wins more than it loses, you've cracked the code and can win forever. And then you will be trading in a carefree state of mind. And yes, losses will bother you a little bit at first, but you'll just get used to it. And when you get used to trading probabilities and sample sizes, which we'll cover, you'll understand that losing is part of winning. But when you're winning more than you're losing, it doesn't matter, because it's all about how you balance the losses against the wins and your risk-reward ratio. So this is why we don't focus on one single trade. We focus on a string of trades. This is where thinking in probabilities and your edge starts to come into play. Most people gamble, guys. They don't have a plan. And this is why 99% of people fail in the markets. They focus on the process. They focus on the money and not the process. So before I teach you anything tactical, you need to drill this stuff into your brain. You need to understand the mental game to make this easy. If you skip the mental game, you're going to be a consistent loser or a potential boom and buster when you find a strategy that works but never make any money and just cause yourself emotional stress and pain that can be completely avoided by just following what I'm teaching you in here. With a predictable system and emotions under control, guys, trading is actually fun. A proper mental game will help you stick to your trading plan, stay disciplined, and make consistent gains. And again, focus on the process, not the money. So the weighted coin toss, guys, your edge. If you knew a coin was slightly weighted on one side, for example, it would land on the weighted side 70% of the time, would you feel comfortable placing a 2-to-1 bet on that side of the coin? Yes, you would, because the odds are in your favour. Meaning every time you bet 5, I give you 10 back. So probabilistically, every 10 coin tosses, you'd win 7 and I'd lose 3. So you'd be constantly making money. And yes, you'd be taking losses. But in this test here, out of 10 sample sizes, you'd be making $70 profit overall, and you'd be taking all of those coin tosses with no emotional stress, and you wouldn't care about a loss because you know the wins are going to outweigh the losses. We want to get the win rate as high as possible, but remember, you only need to be right 50% of the time and make twice as much as when you're right to when you're wrong to become a consistently profitable trader. Then you've got a method of making money forever. And now you'll hopefully start to see why you've got to become comfortable with losing. You need to lose to win. And when you think of trading in a perspective of, say, for example, the next 20 trades instead of the next individual trade, it takes away the fear of losing, because you know losses are part of your edge and you need to lose to win. You're not focused on having to be right on a particular trade or every time you place one trade. It either works or it doesn't in a sample size and you move on to the next one, because you know the odds are in your favour and losing is part of winning. So streaks, guys, you're focused on your edge, knowing that it has a 70% win rate, for example, and you know that you're going to lose probabilistically 6 trades out of the next 20. But you don't know which order. You could lose the first 6 and win the next following 14. Highly unlikely, but you don't know when you're going to have winning and losing streaks. This is where backtesting and journaling your edge comes into play. The more you refine your edge, guys, the better it's going to get. The same as professional athletes, practicing the same thing over and over and over and over again. This is how you achieve pure mastery in something. It doesn't happen overnight, but if you want it bad enough, you'll do it. So let's head over to the roulette table. Roulette is a 47.5% win rate game if you're trading the colours. And these streaks can happen. Just go to the casino and have a look at the win screen on the roulette table. This is why it's so important not to over leverage, especially when you're new. If you're risking 1% and you have 5 bad trades in a row, you're not going to be that pissed off. However, if you're risking 10 to 20% and you have 5 bad trades in a row, you'll be suffering from huge tilts. Tilt's an expression used to describe a poker player's frustration. And then you'll end up like the traders we was describing earlier. And what most people don't understand is your win rate and profit percentage, guys, is determined by your risk to reward ratio. You know, most signal groups advertise, 90% accuracy, 95% accuracy. But what they don't tell you is they use a 90 pip stop loss, this is just an example for the easy math, and a 10 pip TP. Which technically means when they're right, they make 10 pips, and when they're wrong, they lose 90 pips. So, 9 times 10, so they win 9 times, they'll win 90 pips. But they lose once, and they lose 90 pips. So, after 10 trades, they always end up at break even. So, after all that messing around, what's the point? It just ends up at break even, or negative, or worse. And I know groups who have 150 or even 300 pip stop losses, guys, with 20 pip TPs and advertise 95%. And they post their profits, the TP sheets every week. And, you know, they've got like Monday, Tuesday to Friday, and they've got 2 or 3 trades a day, TP1, TP2. Jesus Christ, you want to go in their group and have a look how many trades they've got in drawdown. 2-3 times that amount. And I'm not being funny, but I wouldn't want to go in one of those groups with a small account, take a couple of trades, and end up in drawdown for 3 months just to eventually make 20 pips. That's not a good way to trade, guys. So it's a word of warning there. So when you found an edge, guys, journaling will determine the success of your edge. You can get an edge from almost any professional trader. Every successful trader uses their own edge with a twist. Something like Elliott wave, harmonics, smart money, momentum breaks, support, resistance lines, etc., etc. I personally combine smart money with harmonics and momentum breaks, using all time frames for different purposes. Everyone finds out what works best for them, but remember there's no rush here, as patience is the key in trading. You need to learn the basics of the markets first, such as price action, before diving into strategies. Once you're familiar with how the market moves and the basics, then you can start learning a strategy and looking for an edge. So once you've got an edge, guys, you want to start backtesting it. Don't solely rely on what your mentor has told you, the probabilistic, outcome of that edge, etc., because that mentor or the other people in that group, they won't be trading it as black and white as it's taught to you. It's basically a foundation for you to take and make your own. And you'll also find little nuances within that edge that work better for you as you test and refine it. You need to get a feel for the market yourself, and this will help you build your own confidence. So you need to backtest or trade it on live markets on a demo account and document the results. You ideally want to take the same trade using the same risk reward ratio, your edge, 20 times and let it play out. This will give you a great understanding of how good the edge really is. And a lot of people ask me at this stage, which time frames to use it on, etc. Well, the market's fractal, guys. It doesn't matter. If you want to test your edge out on the 5-minute time frame, you can do your 20 sample sizes probably in one day. If you want to do it on the monthly chart, it's probably going to take you a couple of years. So in the day, it's entirely up to you. You can also go over the failed trades. This is why journaling is so important. I'll show you my journaling at the end of this video and see why they failed. Was it an error you made? Did you feel like, it's just going in that direction and I'm just going to jump in because it feels right? Did you follow your trading plan? Did you follow the rules? Or did you bend the rules and it didn't go your way? And if it didn't, that's how you can actually develop not only your tactical game, but your mental game as well, to stop that happening again. Okay, I lost there because of that. That won't happen again. I need to make sure that I stay focused on this because this works. And you need to turn yourself into basically a trading robot for that one system or one strategy, and then get better and better and refine it. And what that will do is build your confidence. And while you're journaling, you can see what works, what doesn't, how it works, how far it goes, what levels. So for example, if you go from a 1 hour supply and demand level, how many pips that goes down each time it reaches it for your certain strategy example, momentum break, whatever. And you can document that. And then you can build a probabilistic system with a probabilistic risk to reward ratio as well. So then you can kind of not guarantee, but you'll always have a ballpark number of where you're going to be ending up, month to month on your profit sheet. And then once you've got your numbers knuckled down, guys, it's time to take the strategy over to a live account. And this is where the mental game starts to come into play. So transitioning from a demo to a live account, guys, this is where the emotions start to kick in. So your heart rate starts to beat. This is where you start to lose breath and get anxiety. So once you've cracked your edge, this is where the real fun and games start. Now you've gone from practicing and giving yourself confidence with your new edge and found it to be profitable. Now the trick is to stay focused on that process and ignore the money. Continue and just pretend that you're still playing on the demo account. Yes, we're trading to make money, but making money from trading is a byproduct of a good process. And if you start over leveraging, getting cocky, letting the emotion take over, you'll end up back at zero and really pissed off at yourself. So this is the discipline challenge. Regardless of how much capital you've got, or $1 million, whatever, starting small helps you focus on the process and forgetting about the money. I recommend starting with $1,000 or even $500 in your account. And again, the smaller the balance, the harder it is to trade as well. So this makes this test even harder. But if you crack the test, if you crack the code, say for example 1 to 10k from this level, you'll be able to take 10 to 100k, a lot easier than the 1 to 10k. For example, this is why we do it. Working out your risk to reward. I'm waiting for setups to appear. So start with your small balance, $1,000 or $500. Work out the risk to reward ratio. Work out with your edge. Work out what you're willing to risk on each trade, and then wait for your setups to appear. And your setups will appear normally around London and New York Open. And it's going to be very annoying and frustrating at first. But what you're actually doing by following this process is you're creating a huge amount of discipline for yourself subconsciously. So as you grow, right now you're trading in a carefree state of mind, still like the demo account, but with real money, but at a smaller level. So you're creating discipline for yourself, and you're actually internally growing your emotional tolerance, because when you're starting off at 500 or $1,000, you're only, it's not a lot of money, and if it is a lot of money, reduce it even more. Only risk what you can afford to lose. If you can't afford to lose anything, don't trade. Go get a job, save up $1,000, then start trading. Then risk, say for example, if you just want to risk $50 of the, $100, per day for your edge, or if you want to risk $20 per day for your edge, work out what you're willing to risk, set up your edge, and then when you're only risking, say for example, $20 on a trade, you've got no emotion in that trade, but you're actually learning and you're bringing the process over from a demo account to a live account with no emotion involved. And you're not focusing on the money, you're focusing on the process. That's the whole point. So when you've managed to do this for, again, another 20 sample sizes of trades, and then 40 sample sizes or 60 sample sizes of trades, you'll find that just by following the process, staying disciplined, that 1k account, all of a sudden it's 2k, and all of a sudden it's 3k. And as the account balance grows, your risk tolerance is also growing. However, don't get overconfident, because it's very easy to have all that money wiped out. Remember, as soon as you stop focusing on the process and focus on the money, boom, the money will fucking go, and you'll have to start again. But doing this, you'll see, with no emotion involved, you'll be able to execute your trades with no hesitation and follow your trading plan perfectly, just like a professional trader. And again, like I just said, do 20 trades, analyze the results on the live account. If you feel a bit more confident, a bit better, you can put a little bit more money in your account. Make sure that you're only risking a certain percentage of your account in the beginning, say 1% or 2% or 3% maximum in the beginning. And the more confident you get with your edge, the more money you're going to start making. And that goes on to the next slide here, where you want to be setting challenges for yourself. And this activity, guys, is instilling all the traits of a professional trader in you, and you don't even realize. But it's going to be changing who you are as a person. Who you are will, transition itself into the markets and into your profit sheet. You'll be trading without fear. Soon you'll be trading without fear at a $10,000 or $100,000 account or a 7-figure account. Trading without hesitation. Trusting your edge, no fear of losing, focusing on the process. And if you ever get to a certain threshold, say you've managed to get from 1k to 20k, and then you lose, a couple of thousand, and at that point you started to get a little bit, emotional. You found your emotional tolerance there. So what you want to do there is scale it back a little bit, go back to 15k or wherever you was comfortable, and then just work it up from there and keep the risk there until you get the balance back above the 20k, and then go up a little bit more and just keep incrementally increasing it. And it takes time to grow the risk tolerance. Professional traders professional traders aren't able to, go from a non-professional one day and then all of a sudden, have 100 grand, running in the profit flow, and, not get tempted to take it, not get tempted to partial, because they're confident in where the market's going, and they've got the balances, to let those trades run. And it's because they let them trades run, and because they trust their edge, that they don't need to touch them. They don't need to mess around with them. Human interference is one of the biggest causes of losing in trading. So once you've got your edge mapped out, leave it. Test it on a demo account, leave it. Start on a small live account, leave it. Follow the same process again and again and again and again and again until it becomes that drilled into you that you just do it automatically without even thinking. Then you'll be able to look at the markets and actually just take trades without even actually having to mark your analysis up. That's literally me now, etc. So, getting off on a tangent here. Remember, a system, guys, doesn't have to be complicated. You don't need any skill whatsoever to put on a winning trade. Set your risk in advance and accept it and let the market do its job. This is part of the trading system. When you set your risk in advance, it takes away any emotion out of that trade because you know what's at stake. One of the biggest mistakes traders make is they do not set their risk in advance. They do not know what's at stake. They just throw a random lot size on and hope it comes in. They don't even know how much they're risking. They don't know, whether determined to cut the loss if the trade is getting to the point where it's not going to go in their favour anymore. They'll just let it run out and blow their account or stack. They know. And this is why most people lose, because they don't have a system, a process, or an edge. So set your risk in advance, like you do in the casino. When you're in the casino and you're on the slot machine, you put your money in first before you play the game. So you've already accepted that you could potentially lose that. The same as blackjack. You put them in on the table and you accept the risk before you play the game. And that's what you need to do with trading. And then you can trade emotionless. And remember, anything can happen at any moment, guys. We have news outbreaks all the time. We have economic disasters that send the market skyrocketing. So this is where you've always got to remember that anything can happen at any time, regardless of what anyone says, or if anyone says, oh yeah, I know where the market's going, and nobody knows what the market's going. People can predict where it's going based on past performance, but based on past doesn't necessarily mean the future. And as you've seen recently with war in the Ukraine and all of the crap going on in America and COVID, the markets have been going absolutely, all over the place. They've been very unpredictable. There've been a lot of, unease in the stock market. There've been big sell-offs. It's been, an absolutely crazy place to trade. So this is why having your risk set in advance is so important, and making sure you've got a profitable edge. So you're willing to take that small loss. Doesn't matter. Done. Move on to the next trade. Finished. Trading emotionless like a robot. But taking losses, that you're always going to be ahead. And yes, you might have losing months. But this is where your journaling comes in. If you, say for example, if you have 15 losing trades in a row, then it might be, time to reassess that edge. Even 10 losing trades in a row, it'd be time to reassess that edge. The market's always changing. You need to adapt with the market. A lot of professionals adapt with the market. What I recommend you do is get in, some groups with professional traders, be in communities of traders, get in my group if you want to get in my group. If not, get around some of your own trading friends, so you can always stay up to date on what's working the best, etc., etc., so you can adapt your strategy to fit with what's working. Because when you're around professional traders, you'll always find out what's going on in the market, because these guys are constantly finding the best variables, testing, etc., etc. So, guys, last slide. If you're looking for more help or advice on any of the topics below or anything we've covered in this video, please go to the website at blackswanfx.com. There's a link there. You can book a call with me on the calendar, and we can go through any of your trading issues. We can build a trading plan. We can, build a mental game plan, and we can build a tactical game plan. And each call comes with aftercare as well. We have a private group for everybody that's struggling with trading, so they can all bounce off and help each other, etc., etc. These calls are high demand and they are not cheap, but end of the day, they're cheaper than blowing, a $1,000 account or a $500 account or a $2,000 or a 20 grand account, So think of it that way, guys. Think of it as an investment to stop you wasting any more money. Apart from that, guys, thank you for watching, and have an awesome trading career. And if you need me, you know exactly where I am. Website's at the bottom of every slide. Website's here. Drop a message in the comments. Remember as well, I will never comment any WhatsApp numbers in these comments on these videos. I get a lot of scammers on YouTube, and a lot of people pretending to be me. The only Instagram link I've got as well is in the bio of this video. And that's it, guys. So have a good day. Hope you found value from this. If you did, please like it, leave a comment, subscribe, blah, blah, blah. You know the drill. So yes. Ciao, guys. Have a good day.